Hello there, Maverick Traders. This is Imri, and welcome to today's currency recap. Well, there certainly has been an eventful week. Fed Day never fails to deliver, especially when you have Jay Powell on the mic. So, I mean, this has been par for the course for several of the last Fed announcements where the market moves one direction immediately after the rate announcement and the statement is released, and then the market goes down the other way once Jay Powell takes the stage. So this week so far, I mean, stocks have closed lower for 4 days in a row. I mean, let's see what happens tomorrow. It's not looking good, however, but there is a little bit of technical hope here, and I'll get into that a little bit. Dollar strength is back, and of course, all eyes are on tomorrow's job report. So taking a look here at the S&P. I mean, you can see we've technically closed the day below the 50-period moving average, but not by much, you know, and I never like to think of support and resistance. Well, never is a strong word. I usually don't like to think of support and resistance as hard lines in the sand, and that applies to moving averages as well. So it's possible that we find support here on that moving average. Now, keep in mind, this is a cash basis chart. Overnight trading, we'll see what happens. I do think the market. What's interesting is the VIX fell today as the market fell also. That's not what I would expect. If we're in crisis mode, I would expect volatility to be going up, not down. So it is possible that we get a bit of a sharp rally over the next coming couple days, but personally, that's not my technical bet. My technical bet is that we have fresh lows incoming over the next several days, if not a couple of weeks. It's a very similar story in the Vanguard Total World Stock Index. Almost identical price chart, moving average support here as well. What's really interesting is that amidst what's going on in equities, cryptos are holding their own. So we can see here, we popped above those moving averages and we're kind of basing now. I wouldn't be shocked if cryptos could stage a rally here and go back to those September highs, somewhere around September 12th, that upper gray shaded area on the price chart. So for now, I'm going to give the market a -2, more based on yesterday's extremely bearish close than today's action. We'll have to wait and see what that jobs report is going to bring about. But the JOLTS job report was very strong, very inflationary. There is precedent for the non-farm payroll reports to deviate from the JOLTS. So we'll have to see how that plays out. There is precedent for that. It doesn't happen often, but there is precedent for it. So let's see. But if we have another strong jobs report, the market's not going to take that very well. So that's the big news coming out tomorrow. I think all eyes are going to be on the employment reports out of the US and to a lesser extent, the Canadian jobs report as well. Moving on now into currency analysis. Cryptos are holding their own. Like I said, every crypto that we're tracking as of recording is net positive on the day. On the fiat side, the pound, we had the Bank of England announcement today. Market saw that as a reason to sell the pound sharply. The dollar's bid, the yen's bid, and the loonie is also a little bit bid as well. Loonie enjoying a bit of shine there from its neighbor down south. Now, in terms of velocity, it's as you can see, things are moving. I'm not necessarily confident buying the yen here, but I do like buying the dollar. I think you can buy the dollar against the Aussie and the pound and the Swissy. Frankly, you can probably buy the dollar against almost anything right now. But if we're talking pure velocity here, then the currencies that are weakest on that velocity score side right now would be the Swiss franc, the pound, and the Aussie. So that's where I'll be keeping a lot of my focus. And accordingly, we're going to now take a look at some potential trades. So hopping over to TradingView here, this is what I've been saying in the Aussie. It's been following the script really nicely. We traded back into that resistance level. It's going to be, it's not going to be necessarily a very quick drop, but I do expect the basket here to fall into that 75 support area, and then we can see what happens. Like I've mentioned in past video updates, this area has functioned very strongly as support going back to late 2020. So we'll have to see what happens, of course, but my personal bias here is for further Aussie weakness. I also wanted to check out the Swiss franc here. So we're trading into that support area I mentioned, which is making me a little bit wary of selling the Swissy. Against the dollar might be a different story as we're going to take a look here, but I think the Aussie, being short Aussie dollar, is a safer bet at this time. And then the pound, ooh. All right, so I've been calling for a bullish pound, for pound strength. Now, as you can see, we traded into that resistance zone a couple of days ago, and the market did not like that. Am I outright bearish the pound right now? Against the dollar, I'd say arguably yes. I do think cable likely has another leg lower, but on the crosses, I do think that's a slightly different story. I think pairing the pound against the Aussie, against the Kiwi, not right now, but in general on the more intermediate term timeframes, I do see some interesting things there, and I do expect that the pound will find support fairly soon. And then the Kiwi, again, we've traded into this upper resistance area. I like the bearish candle formation here. There's no clear sign here that the Kiwi is going to roll over, but it is something I'm keeping a close eye on. Right now, I like the Aussie short a little bit better. As for the dollar, for you classical chartists out there, you might see what's going on in the dollar here on this daily time frame as possibly a right shoulder of a bearish head and shoulders pattern. Look, I see it. It's very obvious. We'll have to wait and see if we crash back below, right? If we crash back below this support, then I'd say, yeah, we're going back to where the dollar was trading in September, which would be a swift decline. But right now, my focus is firmly on the upside. Now, if I go to our monthly chart here, it would be pretty interesting to see this basket able to establish itself over its all-time high relative to this basket, right? The data doesn't go back very far, but that would be the 2001, 2002 highs. So if we can establish over that high, then it'll be really interesting because we're breaking new ground. All right, so those are the possible currency pairings I'm keeping an eye on. Like I said, I really like Aussie dollar right now, and I think in the short term we can also look for setups in the pound. Both those currencies, however, all right, let's just jump right over real quick into cable. Take a look at what's going on here. That is a pretty extreme oversold reading and a momentum on the momentum indicator, the relative strength index. Now, of course, just because something's oversold doesn't mean that it's over, as I like to say. So I do think there is potential for further decline, but I wouldn't be going short now. I think finding an entry right now is a little bit challenging. So we'll have to wait and see. It's a similar story in the Aussie. I think the Aussie might be putting in that little bounce. I'm hoping we get a little bit more of a bounce, which will then lead to a nice bear market rally that can then be sold. So again, those are the currencies I'm keeping an eye on. Doesn't mean I'm going to trade them. I still need to see the appropriate setup emerge. So in conclusion, look, this is my belief based on the technicals, based on the levels we've taken out. I think equities have likely topped. I think we have fresh lows incoming, right? I'd love to be proven wrong. But that's what the chart is telling me right now. Dollar strength is back, at least for the foreseeable future. But here's what's really interesting. Like I mentioned, cryptos are holding their own. During this entire year, we haven't really seen extreme divergence between cryptos and stocks. If anything, stocks fall, cryptos fall harder. And now we're seeing a bit of a divergence. So if there is a hole to be poked in my argument that equities have likely topped and we have fresh lows incoming, it would, in my opinion, one of the best ways to counter that argument would be to look at what cryptocurrencies are doing. And cryptos are like, the riskiest of risk assets. And if cryptos can hold their own and continue to rally, then I'd be increasingly surprised to see divergence between equities and cryptos in that sense. But this is my hot take. Love to be proven wrong on the first point there. But we'll have to wait and see what happens. Either way, currency markets remain volatile. There are tons of opportunities. Now, just because there are tons of opportunities doesn't mean that you should feel pressure to always be in a trade. At the end of the day, you still have to stick to your trading plan and ensure that the setups that you trade are presenting themselves in the market. All right, well, that's it for me, guys. Thank you. I'll see you next week.